Hi guys, it's Frank from Altcoin Buzz, and today we're going to discuss Ethereum. Is it about to explode? Because we have some really interesting price action going on, especially on the ETH BTC chart. And furthermore, in our news video yesterday, we went over a massive bull signal for Bitcoin. So I want to give you some perspective on what that signal is. And we're also briefly going to go over some more fundamental factors which might be affecting Bitcoin price moving forward. If you've enjoyed any of my videos or Matty's news videos or Leia's interviews, don't forget to smash that like and subscribe button, as it really helps to support the channel. Thanks guys. Okay, so let's start with this massive bullish Bitcoin signal. So this was from Polar Hunt, a trader who noticed that on the 3-week candle, it's not a very conventional chart to use, but nonetheless, let's have a look. We're here on the 3-week chart for Bitcoin USD on Bitfinex. And what he noticed was that the MA27, which stands for the moving average, the 27-period moving average, has gone from flat to upwards trending. And as this article by News BTC pointed out, this is a once-in-a-cycle Bitcoin bull signal. Now, this has some pros and some cons. The pro is that it's a massive signal, which happens rarely, which could indicate something big is happening. The con is that there's not a big sample size, right? It's not like this signal has been successful many times in the past. And that is what I'm going to show you right now. Okay, so this signal is this orange line here. This is the 27 simple moving average. So as you can see, we were going pretty much flat. We came down here. We started moving up right here, right? When the price was just above $7,000. And as you can see, the moving average has been going up since then. Now, what is interesting to note is that this moving average started going up when Bitcoin made a move from 6,500 all the way to 10,500. But then, despite the fact that this moving average was going up, we saw a monumental dump from 10,500 to $4,000. Now, I don't know if any of you guys were here around then. You probably were. That was some pretty scary stuff. I remember that day, just thinking like, oh my God, Bitcoin is down 50%. This is ridiculous. And I bought quite a fair bit down at this. I think it was about $4,500. Because although I'm a trader, and from a trader's perspective, it looks sort of scary in that, we're just trading down, the trend is going downwards. From a fundamental perspective, I believe in Bitcoin long term. And it just seemed crazy to me that that Bitcoin would be at that price so quickly. So I figured, yeah, it was a good time to buy some. But okay, I digress. Let's go back to this 27 moving average. So as I said, it started shifting up at the $7,000 level, despite us having a massive dump here. So is this the start of a new massive bull run? Well, let's have a look at the last time this happened. So the last time that this line started trending upwards was all the way back in March of 2016. So look what happened here. We were coming down, trending down, and then we started seeing a small shift in March, April, and then May. And then we saw this big move up. But what I want to point out to you guys is that even though we saw this big move up, we saw a 30% decrease in the price of Bitcoin. So just because this is starting to move up, it doesn't mean that, we're going to have a straight line up. That's never how it happens. There's always going to be some pretty big correction on the way up. But anyway, as I mentioned before, the pro of this indicator is that it's a big sort of long-term indicator on the 3-week chart. Any indicators which you see on the longer time frames are more indicative of price movement than they are on the shorter time frames, because more people are looking at those bigger time frames, especially big institutional investors and traders are looking at these indicators. But again, we've only had one indicator of this in the past, and I think it's interesting to look at, and it certainly is a potential sign for a bull market. My kind of best guess right now is that Bitcoin will enter another major bull market within the next 6 to 18 months. But I wouldn't be surprised if we see another dip down to sort of 7 to 8K levels before that happens. I haven't done an in-depth analysis on Bitcoin recently, but I can do that for you guys. Let me know in the comments below if you'd like me to do that. The reason I haven't done it is that we haven't broken out of this consolidation yet. And I think that until we break bearish, it's just not that relevant to see where we might correct just yet. Okay, so the other factor which he pointed out, this is an interesting one, guys. So this is a diagonal trend resistance line. As I've mentioned in my past videos, I'm not a huge fan of these, despite using them sometimes. So why am I not a huge fan of these? Well, the trend line that he's pointing out is this one. So it goes up from $14,000, it touches $10,200, and then here, as you can see, we broke out of it, and now we're potentially finding support. We've already had a bounce from 8,850 all the way up to 9,300. First of all, when you're drawing a trend line, you want a trend line which has many touches. So a trend line which has just 2 touches is, not that relevant. Secondly, when you draw a trend line, ideally you want it to be as long as possible. So I would say a more relevant trend line, if you're really going to use diagonal trend lines, is this one. Okay, so this is from all the way back in 4th of December 2017, when the price went up to, $20,000. Then we touched again here at $13,750. And then here we had a small sort of break. Well, it was a fake out if you look at it from this perspective. And as you can see, if I just take out this previous resistance line, which he was talking about, now it looks kind of bearish, right? Because, we had 2 touches there, we had a fake out, and now we've come down. But again, the thing is, I don't think either of these are that relevant. And I'll give you an example why. And the reason is that you can draw this line in so many different ways. So another way to draw diagonal resistance lines is actually to go to the close of candles. So for example, we go to the close of this candle at 13,900. We align it with the close of this candle at 11,000, and that also aligns with the close of this candle at 10,000 and the close of this candle at 9,600. So, as I was saying before, in general, you want to get trend lines which are A, longer, which go longer back into the past, and B, which have several touches. In other words, there's more significance, there's more notable price action at that level. So I would personally go for a diagonal trend line like this one. While it's interesting to look at different diagonal trend lines, I wouldn't use that as a major factor for your buying or selling decisions. And then he talks about the MACD crossing bullish, and not often that it happens. Okay, so let's have a look at what happened the last times we had this bullish cross. As you can see from this MACD, we had it once over here in May 2019, and once over here in November 2015. So here, instead of having just one previous data set, we have 2 sets of data. So let's have a look at what happened in May 2019, last time this crossed bullish. As you can see, the price went from 6,800 all the way up, for a 100% gain, all the way up to 13,700. So that's a pretty impressive gain. However, what is also noteworthy is that we corrected quite significantly from there, 52%. Nonetheless, okay, we had a bullish crossover and we had a massive spike in price. Okay, let's look at the last time this happened. The last time this happened was in November 2015, and here, indeed, it was a very good signal. We barely retraced at all. From here, we pretty much, this was $300, and we just had a massive bull run. We went all the way to $20,000 before this signal started turning around. So certainly, the combination of these factors is indicating that we may be in for a new bullish run. But again, what I want to point out is that it's very possible that we correct down to 7,000 level and then start the bullish run. It doesn't mean that, okay, now the signal has happened, okay, Bitcoin is not going to correct even like 1 or 2 or 5%. It's just going to start booming. That's not how it happens, especially with these bigger time frame signals. It's very possible that in the shorter time frames, in other words, in the first week or two, that we might see a correction and only then see a big bullish move. Overall, guys, I have to say I'm very excited for the Bitcoin price. I do not have a large long position now, but I am an aggressive trader, and I have to admit that when I start seeing some signals that Bitcoin is actually starting this next rally. And again, I see these as potential signals, or I see these as beginning signals, but I would want to see confirmation. And when I say confirmation, what I mean is that I want to see us break $10,500. I want to see volume. But when I start seeing signals like that, I must admit I'm going to start getting very excited. Okay, so this is somewhat unrelated to TA, but I think that it's useful to look at news in the markets worldwide to see how that might affect Bitcoin price, because when the S&P 500 dropped dramatically, it was actually had its biggest drop since 1987, which was huge. Bitcoin dropped as well. There was a high correlation, and there has been a high correlation between S&P 500 dumps in the market and Bitcoin dumps. So the fact that we have another 1.48 million workers newly unemployed, and this is the 14th straight week that more than 1 million people have filed for jobless claims. This is not great news. And for June, there was actually a decrease in the unemployment numbers, but this analysis, which is quite detailed and quite extensive, it goes over a whole number of graphs here to really break things down. They say they don't expect the drop in unemployment to continue past June. And furthermore, if we look at the coronavirus numbers, we can see that the daily new cases is just going up exponentially, right? We haven't even had a drop in daily new cases. And especially in the US, it's leading the way in terms of new cases and in terms of existing cases. I just don't think that this is a great sign for the macro level markets. And this is one of the reasons why I'm still a little bit wary about getting into Bitcoin. But okay, what's really exciting about this video is the ETH BTC chart. So we have Peter Brand over here, very famous trader. He's got 330,000 Twitter followers. He's been trading for decades. And he talks about a significant breakout in the ETH BTC chart with a target of 0.03276. Most alts should gain on Bitcoin in the near future. So this is pretty exciting stuff, especially when such a reputable trader makes a prediction like this. So let's have a look at the ETH BTC chart and see what he's talking about. So before we get into the nitty-gritty of the daily, as you guys know, I like to look at the bigger picture, and I think this is one of the biggest mistakes that beginning traders always make. As a trader myself, I think it was probably months before I even started looking at the weekly or monthly charts. I was so lost in the daily 4-hour charts that I barely even looked at these, and you really want to get a perspective of the market before you start making trades. So look at this chart. What does this tell you? What it tells me is that we are in a massive bear market, which hasn't showed any major signs of correcting yet. Why? Because we have a high over here at 0.12467. We corrected down here 0.05. We attempted to break previous highs, didn't get anywhere close, came up to 0.085. Came down smashing here. We found some sort of potential support at the 0.026 level, but no, we broke that support. We came down into this zone. We tested it again, this 0.026 level. We resisted, but now what's getting interesting is these last 5 months. And to have a look at that in more detail, let's go down to the weekly chart. So this is where things start to get a little bit interesting, because what we're seeing here is a consolidation between the 0.028 level and the 0.02 level, from which we have now in some ways broken out of. So what do I mean when we've broken it out in some ways? Well, first of all, let's have a look at the general consolidation area over here. So why do I say that in some ways we've broken out of this and in some ways we haven't? Well, first of all, let's look at the ways in which we have broken out of this. So we had this move from 0.02 all the way up to 0.0256. Then we had a small correction down to 0.024, and then we broke this previous resistance, okay? So I'll draw this red line at the previous resistance, which is 0.0255, okay? We broke that, which is a good sign, because now we have a high, we have a higher low, and a higher high. So this is the start of a new bull trend. In what ways have we not technically broken out? Well, let me show you. We have another resistance over here. Look at this. We had 3 candles which topped out at the 0.026 level. So this was the next major resistance after the 0.025. And what happened here? We broke out of it, but then we came right back down to it. So this suggests that we have another pretty important resistance here, which has not yet been decidedly broken out of. The next thing, which isn't so bullish, is the volume. So we have 1 day left in this week, and this volume is not really indicative of a new bull trend. So you see we've had decreasing volume over here, which is very common in a consolidation zone. And then we had this slight increase in volume over here, but nothing to write home about. And then we corrected quite significantly, and now we're sort of attempting this again. So the way I see it is that this is very interesting in that this could potentially be the start of a new Ethereum bull run, but we really want to see some more indicators that are suggesting that this is really starting. The first would be to lay claim to this support level of 0.026. The second thing we want to see is an increase in bullish volume on the weekly. Okay, but that being said, let's have a look at what price Ethereum could reach if this is indeed the start of a new bull run. This is where things get pretty exciting. So if we do a one-to-one extension of the previous wave here, we have some potential resistances lined up. Now, the one I think is most likely to hit is the 1, 2, 3, 6. Why? Well, according to Elliott wave theory, there are 5 waves, and the third wave is often the longest but never the shortest. So what do I mean by that? I mean that this could very well be considered to be a wave 1, and this would be a wave 2. And then if we get to a wave 3 up here, this wave 3 would likely be longer than the first wave. So in other words, usually you want to go for a one-to-one extension, but considering this would be the wave 3, and considering that we would be breaking out of this consolidation zone, it's quite likely that we would see higher levels like 0.03. Now, Peter Brand actually reaches up for even higher level, which also corresponds to a common fib extension zone, which is the 1.618. So Peter Brand here is talking about the 0.03276, and this aligns very closely with this level at the 0.0326. So if we just consider a resistance zone up here, or in other words, a target, and we look for an entry right now, what you would want to be doing here is saying, okay, well, I believe that this is the beginning of a new bull run for ETH BTC, so I will be proven wrong if we break previous lows. You want to give yourself a bit of safety space over there. So then you would have a stop limit over here of 8.5% loss, and you would say, okay, well, conservatively, I'm targeting the 1, 2, 3, 6 level. That would already give you a 2-to-1 risk to reward, which is not bad. And more aggressively, I would be targeting this level at the 0.0325, and this would give you almost a 3-to-1, which is a pretty decent trade. Now, again, as for me, although I'm an aggressive trader, I do want to see more confirmation before I take a potential 8.5% loss. Now, I wouldn't be surprised if Ethereum comes down to test this previous support at 0.0255, and that would potentially give you a better price to get in, also with a better risk to reward, because instead of risking, 8.5% on this trade, if you get in here, you would be risking just 5%, and you would have a much better risk to reward considering that you have the same targets. So now let's have a look at the RSI and the MACD. The RSI isn't telling us too much. We approached the overbought level, we resisted from it. We've had a higher high compared to the previous level, and as already previously mentioned, we are on a weekly uptrend on Ethereum now, so that's not surprising to see that type of action on the daily chart. We are also seeing a bullish crossover on the MACD, which the last few times it's happened has led to pretty notable bull runs. So certainly there are a number of indicators suggesting that this could be the beginning of a new bull run. And the volume on the daily is more interesting than the weekly. If you look over here, you can see that we have had one very sort of bullish day here where we were well above the 21 moving average in terms of volume, and we haven't seen this type of bullish volume, for 83 days. So yeah, that's certainly something to consider. So again, just to summarize for you, if you're thinking of getting into this trade, the conservative way of looking at this is saying, okay, well, I don't know for sure if we've broken this level yet. We haven't seen real volume on the weekly. So you might want to say, okay, I'm going to wait to see what happens at this level. If we start breaking out from it and for example, we break this previous high of 0.0263, then you can start having more confidence that this is really going to start reaching new highs. Alternatively, again, if you're conservative, you can say, okay, well, this looks like it could be an interesting trade, but I want to get a better price. So you wait until it corrects, for example, down to the 0.0256 level, or alternatively, down to here where there is a big volume cluster. Let me take this out of the way so you can see that. You see this big volume cluster down here at 0.025? I would say this would be a very interesting zone to buy this market. So we'll just mark that in blue over here. And of course, we have this previous resistance turn support over there. I'm going to mark this as a whole buy zone. And this is an interesting buy zone because first of all, we have major resistance over here, which could now turn into support on the way down. And secondly, as I said, if you get in here, let's say you get in the middle of this box, you only have to risk 5% on this trade, and you can make 20 to 30% at least profit. So that could be quite interesting. Okay, so before we finish this video, I want to show you guys the ETH USDT chart. So when you're trading financial instruments, you want to see where there is the highest liquidity or the highest volume. So have a look at this list on CoinGecko. What you want to do is you want to go to the Ethereum cryptocurrency, then you want to go to the markets over here, and then you want to click on volume. This will show you the highest volume trading pairs. Now look at this. Ethereum USDT, USDT, USDT. The first three trading pairs represent 2.2 plus 1.25 plus 1. So that's about 4.5% of all of the volume of Ethereum. And then you have Ethereum Bitcoin down here with 0.9%. But look at this. After that, you again have a whole bunch of ETH USDT pairs. So what does this tell me? So what does this tell you? This tells you that there's a lot more volume for ETH USDT than there is for ETH Bitcoin. And you really want to be looking at the chart which has the most volume and liquidity. So the ETH USDT chart shows some similarities to ETH BTC. However, it looks a bit more bearish. So why do I say it looks a bit more bearish? Well, because we have not broken any previous daily resistance. The previous daily resistance is at this $250 level. And as you can see, we've resisted from there several times, and we are in this consolidation zone. Now, the fact that we are consolidating below this major resistance is a great sign, because it means that the price is finding support in this zone. It means that the sellers are not willing to take it below this. It means that, buyers are interested in buying in this zone. And in general, this is creating a great area for support. So if you have a lot of support below a resistance, it means that the bears are in an uncomfortable position for bringing it lower, and that the bulls have a certain support below this level to help them jumpstart their new move up. Okay, so let's zoom out to the weekly chart. Let's have a look at the RSI and the MACD. Again, the RSI and the MACD are doing the exact same thing as they are for ETH BTC, so nothing too interesting to look at there. In terms of the volume here, and again, as I said, there's more volume, more liquidity for this pair, so it's more relevant to look at this volume than it is for ETH BTC. But here we're also seeing something very similar. We're seeing bullish volume, which we haven't seen in 40 days. It's not significant bullish volume, but it certainly is above the average, and it is an indication that things might be starting to shift. However, until we've broken the $250 level, we really can't say that Ethereum is going to start a massive bull run. Okay, but another bullish factor to consider for ETH BTC is this. So have a look at the others. The other coins is pretty much all the coins not in the top 10, with some exceptions. So the others went from a total market dominance of 20.74% on the 11th of June 2020 all the way to 23.6%. Okay, so 20.7 up to 23.6, that's about a 15% increase in market dominance. However, Ethereum went from 9.8 to 9.72, so Ethereum has actually decreased in market dominance. So it's relatively unusual to see that the other coins are gaining market dominance over Ethereum, and it is a suggestion that Ethereum may now take the reins in terms of regaining market dominance. And another reason to think that this might be happening is that, of course, Bitcoin is in a consolidation zone. We've been ranging in Bitcoin for over a month now, and this is perfect times for alts to really take off. And even Tour de Mister, who is a big Bitcoin proponent, agrees with Peter Brandt that ETH BTC technicals are looking bullish. So in general, there's a lot of signs that ETH BTC could be starting to really take off, and it's a chart which I recommend you guys keep a close look at. Again, in summary, look at the 250 USDT level for Ethereum. And in terms of ETH BTC, see if we break above the 0.0263 level. And also take note if we come down to this blue box, which is in between the 0.0256 and the 0.0249 zone. Because if we break above that previous resistance, it means that we could be starting a new bull trend, and if we come down to here, you could have a much better risk to reward for entering this trade. Alright guys, that's it from me for today. Let me know what you thought of this analysis. I hope you learned something. I know I myself benefited a lot from YouTubers teaching me about cryptocurrencies and technical analysis, so I hope to be able to pay this forward to the newbies out there who are not really knowing what's going on, who are looking for some guidance. So, I really appreciate reading all the comments in the videos. I try to reply to as many as I can, and it's really heartwarming when people are telling me that they're learning a lot or that they're benefiting from the videos. So, please leave a comment down below, and don't forget to smash that like and subscribe button, as it really helps to support the channel. All right, guys, as usual, see you in the next one.